So we'd have to take another look at Workhorse Group Stock again, as it's just insane what is currently happening while being up more than 6% again since the recent lows. These occurred after spiking an astonishing 7,800% in January, quickly dropping back to under $8 however. But since then, we've actually seen some other 125% gains, from whose recoveries we're now pulling up. So what we are going to do today is give you an insight into what is actually happening to Workhorse Group Stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us, but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. And in the case of Workhorse, we're essentially looking at an extremely popular delivery car manufacturer among investors, building some incredible electric vehicle vans with a ton of crazy technology built in, allowing for notably higher cargo space, as well as smart systems that always know where each van is. However, following the large jumps in January, and this is critical for our prediction at the end of the video, its stock has been steadily declining since the end of last month. Workhorse wasn't the only big EV company to pull back at the time though, with several others doing so as well. But in addition to the sector's bearishness, Workhorse also lost a significant postal contract to Oshkosh Defense in late February, which was a big cause for the stock's decline. However, the tremendous enthusiasm among retail traders is the reason for the stock's resurgence of about 130%. And because the stock has been mentioned a lot on forums like Wall Street Bits and in videos like this one, thousands of people have pushed short sellers to cover their positions, causing the price to climb further. But this all comes down to the short interest, which has risen while the stock has been pulling back. And, as we are currently pulling back, short interest is rising again, making a new short squeeze highly possible. The most important issue for now, however, is orders, as the company is still relatively new and figuring out manufacturing, which has caused some investors to sell their positions as orders are somewhat lacking right now. Workhorse's current valuation reflects the fact that it is still a minor participant in an industry dominated by giants as well. However, as previously said, this does not have to be a negative thing. In fact, it may be a one-of-a-kind opportunity to participate in the long-term growth of the electric car industry without having to invest in some overheated stocks. In fact, after the pullbacks, the considerably lower prices will give less risk, which may encourage more investors to purchase again. And this is exactly what we are seeing right now, being up almost 7% since the recent lows. The 5 to 6 times sales Workhorse is currently trading at, which is also very crucial for the prediction at the end, also make the stock not actually that costly for a growth bet in the EV sector. Furthermore, Workhorse's cash position of $215 million should supply the firm with the short-term growth capital it requires, indicating that the company will not need to raise money in the near future. So as said before, the organization is committed to offering a delivery service that is as ecologically friendly as feasible. And, as e-commerce continues to grow at a breakneck pace, investors are scrambling to find methods to harness and profit from the resulting boom in logistics and distribution. And doing it through an EV option appears to be a solid idea. If you wish to buy for the short term though, you should take into account the stock's current volatility and large price swings. This is, of course, also critical for long-term investors and might be a significant growth component. Furthermore, another short squeeze is not as unlikely as it may appear if the hype among retail traders persists and short interest keeps rising. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.